How's everybody doing today? Welcome to Fin Tips live-ish from the Speakeasy here. This is, of course, recorded, but hey, we're going to talk about some earnings coming up. It's earnings season. This earnings season week is the second busiest. Next week is actually the busiest in terms of number of companies reporting, but we're going to take a look at some of the big names that are reporting because likely going to get some headlines here. Let's take a look. I'll give you some stats of whatever I can along the way. What I did is I put the big super-duper mega cap stocks up there. Tesla, Microsoft, Apple, Facebook, and Amazon. Tesla is going to be first up, reporting on the 26th there. What I did is I added some of the stats, like how often they beat on earnings, revenue, what the average gap up or down is, the intraday move that you normally see when the market's open, and then the full day's average move, and we'll put the volatility off to the side there. Tesla is the worst in terms of earnings beat rate there, but second best in terms of average full day performance. It averages a gap move higher of 1.7%. Now, the first quarter earnings is what they are reporting, and so unfortunately, it's the worst quarter in terms of having the greatest possibility of it being positive. It's only positive 30% of the time on earnings day when reporting their first quarter there. It hasn't been positive on the first day of earnings following them reporting earnings. They report, you can see here, after hours, so the day after that. It hasn't been positive when reporting their first quarter earnings since the 2015. So if we do first quarter of 2020, 2019, 18, 17, 16, 15, you get the point. Hasn't seen a positive day when reporting their first quarter earnings since 2015. So this is a chance to talk about it and see if it might change a little bit. Now, last quarter it fell 28 bucks. That's 3%. It's not like a big deal, but that's $28 there. It's shown profitability, which is a big one for them. That's going to be a focus. Shown profitability the last 6 quarters in a row. Can we make it 7? I don't know there. We're looking for $9.8 billion in sales and 73 cents in total earnings there. Microsoft comes up next here. Microsoft is the least volatile out of the group in terms of dollar moves there. It's kind of a stock that's been on a tear lately, right? It's up 11% in the last month, right? So double digits in the last 1 month there, breaking out to new highs seemingly every single day there. They have beat on earnings 19 times in a row. So you can see more consistent here in terms of that there. And the revenue spread between what they beat on and what's expected is getting wider. Let's see if I can show you here. So here in purple is the actual earnings. Actual earnings. So the actual earnings, obviously trending higher. It's looking good for them. But the spread between what happened and what was expected is getting wider and wider. So I don't know. I'm a bit of a contrarian in that respect there, but it's getting a little bit wider there. Also, their first quarter earnings for Microsoft tends to be their best in terms of seeing the stock higher on earnings day. So 74% of the time is actually positive on earnings day. If we go back to this chart here, Microsoft and all of them will report on this day. Oh, no, you can't see. On this day, after hours. So that's what that's saying there. It'd be after the close there. So and what we're saying is on the 28th or the day after is the day that it's positive. And 74% of the time when they report first quarter earnings there. All right, Apple comes in next there reporting on the 28th. That's certainly going to get some headlines there. It's the second best in terms of beat rates, 89.7% of the time. Second best in terms of revenue beat rates, 79% of the time. And, we're getting more consistent. That's all we're trying to show here if you're not familiar with the numbers there. In the last 10 years, it's only missed 4 times on earnings. In the last 10 years, they've only missed 4 single times there. Stock's been lower by 1% or more when they did miss those earnings. So it's not a good thing, obviously, when they miss there. The good news is the first quarter for them is the best in terms of their beat rates, and positivity on earnings day. 95% of the time on first quarter earnings, they do beat and they are positive. It happens to be the same number there. The bad news is it's the worst performer overall. So let's go back over here real quick. We'll show price. We'll go add in all of them here. So here is loading up every single stock there. Let's change it to performance here so far to see what's going on. We'll go year to date. Oh, percentage, sorry. Go over here, take a look at that. When you're looking at here at the worst performer, Apple, only 1.23% positive on the year. That's unfortunate considering how well the markets have done this year. So that's the bad news there. This could really wake things up for Apple. I know they just had their spring event there, launched some new products that were like, what? What's really going on there? But that's what you have in terms of that for Apple coming up there. Facebook ranks the most consistent out of the super duper mega cap stocks here, being positive or beating earnings 91.4% of the time, and the same on revenue as well. It's also the best one-day gainer, average gain 2.5% there for all earnings announcements across the board there. Comes in third place this year as far as performance, which we can go back to. I was just showing that chart there a second ago. If you're looking at Facebook here, that'll be an orange 10.24% as of right now, timing of this video here. It's also seeing its beat spread widen out there a little bit in terms of what's expected and what's actually to happen. Now, we're seeing that in basically every stock that's reported earnings. What was expected out of them and what happened was significantly higher in terms of their earnings beat rate there. For their first quarter earnings, which is what they're reporting there, they've missed 2 times. One time it was lower by 6%, one time higher by 6%, basically. The expected move on this sucker is $14, plus or minus. So take the price where it's at. Traders are expecting plus or minus $14 for Facebook there. Going back over here, let's take a look at the last one. You've got Amazon. Now, Amazon ranks as the most volatile. So when earnings come out, that action, that back and forth, that's what we're trying to report here in terms of dollars. $8.50 there. It's a bit of a coin flip, too. Positive on earnings day is 50%. So 50% of the time it's positive when they report earnings, 50% it's negative there. Also seeing the beat rate spread there widen up a little bit for Amazon there. $113 expected move. That explains the volatility, huh? $113. So plus or minus where it's at, $113. It's also pricey. I mean, it's a more expensive stock there. But the last 6 quarters in a row, it's beat on revenue by at least $1 billion in a quarter. I mean, and I'm talking like that's beat by $1 billion. There are quarters like last quarter beat by over $5 billion because of the virus and whatnot there. So that's what you have this week. There's a lot of other names reporting. We'll cover them on the closing beat. That's a live show that we do every day at 5 o'clock on our YouTube channel. But here's some stats, just to kind of get you going for the day. And let's see what happens, right? It's going to be a lot of fun. It's been a lot of fun out there lately through this earnings season. And we're just over a quarter of the way through it. So we've got a lot more to go. But I hope this helped you in some way. Let's see what happens. We'll see you on the closing beat. Thanks for watching, and subscribe and all that good stuff. Supposed to ask you to do that. Enjoy.